on one hand, you have seen a significant uptick in Bitcoin prices in the last couple of months generally, but you look at the knee-jerk reaction, the pretty volatile move you saw downward over the weekend when you saw geopolitical risk really start to hit the market as well. Very unexpected moves. How do you think about the potential for Bitcoin to grow into this halving when there are so many unknowns?
Well, I think the approval of several of the Bitcoin ETFs at the beginning of this year is such an incredibly positive catalyst for Bitcoin. And I think that's the reason we've seen such a big rise up in price ahead of the halving, something we haven't seen in previous halving cycles. The fact is that, put Grayscale Bitcoin Trust aside, there's been 27 billion in net inflows in these ETFs since they were launched just 3 months ago. That means over 500,000 Bitcoin has been purchased by these ETFs over that time period, which has had a pretty, I think, dramatic impact on the price. And that's at a time when we're mining 900 Bitcoin a day, or the network is releasing 900 Bitcoin in new supply per day. And at the halving, that's getting cut in half to 450. Bitcoin still has a lot of fast money in and out of it, though. Riot is here for the long term. I think we're seeing more long-term holders in Bitcoin more than ever. But when geopolitical events take place, there's different news items. We tend to see a lot of short-term volatility around Bitcoin. For us, that's just short-term noise. Our long-term investment thesis on Bitcoin is strong, and I think we have the setup for a very positive move in Bitcoin over the next several months here.
Okay, well, speaking of the long term, one thing that we knew in the long term that was coming certainly was the halving, which is set for in just a few days. Jason, I'm wondering what you're doing at Riot ahead of the halving. Are you planning to unplug any machines that you use for mining currently because they'll overnight become unprofitable?
You can't really prepare for a halving once it's coming up. The preparations that we made for this halving came years ago. They came from the foundational pillars of our business when we aimed to have a very low power cost. That's the #1 input cost, variable input cost for Bitcoin miners. And through our power strategy, we had a all-in 2.2 cents per kilowatt hour power cost in 2023. That's one of the best of the industry. So that gives us a lot of staying power when Bitcoin mining economics become constrained as a result of the halving. Remember, there is a difficulty index in Bitcoin as well, and that adjusts up and down with how much hash rate leaves and joins the network. So that foundation to our business is what prepared us for the halving today. And the massive expansion plans we set in place years ago were preparation for the halving today. As a result of those plans, we have a new facility coming online this month. It's been a major expansion we've been working on. We have the latest generation equipment, the most power efficient equipment out there that's going to be turned online very soon here. So, the work we do today is preparing for the halving in 2028. The 2024 halving, that preparation came years ago.